It was March 24th, basically March 22nd, when I admitted my children to the new schools. And on that day, we had a nice picnic at Godavari EC Mode office also. And just 2 days before, the news came that the entire country was going to be shut down. And the news came with lots of confusion as what needs to be done going forward. And over the time, the first months, basically what we realized that was everybody was having a good time, lots of cookings at home. Everybody became a cook for some time. And then the real things start hitting to many of us, the economic turmoil. And we started hearing how people were going foodless and so many problems happening for many of us, and mostly in the form of economics, or basically in terms of money management. Fellow Toastmasters, the context that I'm bringing up here may not be equally similar to that I was 2 years back, but it is definitely has given us a lot of thinking of how do we manage our finances, considering the situation may be the same or even worse in coming days. We don't know yet. Let's hope I'm hopeful that things will be much better, since it has given us 2 years time for the government and for people to manage and understand how do we deal with it. But today I'm bringing this topic of investment or saving. And I'm sure while we have lots of our interest, this particular topic never ceases to get our attention. So not to lose any more time, the idea is to do a panel discussion here. And for that, I have invited, or basically saying they have requested or they have accepted my request to be one of the panel members. And let me introduce all the three of them. And I request Techmaster to highlight them along with me as part of the speech discussion. Toastmaster Anil. He is an CA for more than 15 years and 7 years alone experience in PWA. His experience in the field of auditing, business and taxation, currently managing partner at AP and Associates. So when you say AP, I'm sure it is Anil Paudel and Associates. Thank you for being here. And we also have another Toastmaster, Saurabh. He's an entrepreneur, chartered accountant, and investment manager. A person we all look forward to meeting and understanding more in coming days also. And lastly, we have the person who was just mentioned many times, Toastmaster Rahul, who is a banker by profession. He's a relationship manager at Century Bank. Welcome to all the panel members, and I request all the guests to listen carefully so that we could all get the idea of what needs to be done going forward. So first of all, thank you, panel members. And with that short introduction, I would like to jump to the point directly, and I would like to start with Toastmaster Anil. Investment or saving during the current context?
Thank you, Toastmaster Sushil. So when we say saving, our income is divided into saving or consumption. Okay, so when you are earning 100 rupees, you are saving, or you are expending 90 rupees and 10 rupees you are saving. So saving is called, formation of capital also. So you, before investment, you need to have a savings. Okay. And when the questions comes when saving or investment, I would say both are equally important, because to make an investment, you need to have a savings. Saving is made mainly for, to meet contingency fund. Number one, like contingency means, for the future needs, the saving is required. Like if you lose a job, then saving is required. If you need to meet some future expenditure, like your child educations, your family function like marriage, birthday banda, your saving is required. And the third thing is saving required for the investment. So to start the business, you need to have a saving. So saving is important, but before that, like the question, like it's a very difficult question: saving or investment? Because saving is also equally important. Investment is also equally important. Why investment is important? There are certain things, there are why saving is important. Number one is, to beat the inflation, saving is important. Sorry, investment is important, because otherwise, if you save the money and put in the fixed deposit, your saving will be depleted over the time because of investment, because of inflation. So investment is required in long-term instrument like real estate or financial instrument like stock market, government bond. So so investment is equally important for that. So and saving is investment is important for earning returns in the long term. Investment is important. So I would say, without taking further time, I would say that if you have a short term goal, then saving is important and keeping the money in FD is important. If you have, if you do not have a short term need of the fund and you are looking for the long term, then investment into real estate or real estate or stock market or financial instrument is a better idea. Yes,
Thank you.
Toastmaster. Yeah.
Thank you, Toastmaster Anil. As I hear, you're emphasizing that both the saving or investment is equally important. Well, the idea for us to, for the idea you're giving is saving could Rahul, have a Batisa. So the idea of saving is could be the short term, and for investment is to beat the inflation, for that to be for the long term. Okay, let me from that point. Thank you for that point. I'll just come back to you again and later on. Toastmaster Saurabh, investment or saving, taking the current context of pandemic looming very close to us in a couple of months. We don't know what the situation is going to be.
Oh, that's an interesting topic. Thank you, Toastmaster Sushil. So, since you have asked, considering the COVID, I could clearly say that you need to have a more disposable income. That means it will come only from the saving. But if I look into the whole scenario that we have been moving in Nepal, so let me like change a little situations how we are moving in Nepal. So if we see a report from World Bank and the data from 1975 to 2016, it says that there's a global domestic saving of 11%. That means out of the total income, we only save 11% in Nepal. And that's because we have a high level of consumptions in Nepal. And to to tell a context on that, that we are living our life, and most of our income are consumed by a high level of cost or high level of expenses. So considering that, there is no other option than to increase our income. So to increase our income, and considering the inflations in our market, savings won't do a lot to all of us. So as an economy, or for every one of us, the only option we have is to invest. And investing, I just want to tell you a little example. Okay, we have not thought about those things, but it could be a very eye-opening. We have a grain of maize, small grain, single grain. If you save that, then it will remain as a single grain. It might not feed you, but if you take that single grain and plant it in your field, then of course your family will feed with those productions. So if we think about saving, it will save you a little time, like for a For a day, you can like consume that maize corn. But if you plant it or if you invest it, then you will have a whole season or whole month to feed from it. So obviously, I think we need to go for a investment in a country like Nepal. If you try to save, it's just very small saving, and it won't actually justify our approach for a better life. So and for that, I just want to add a new things also. For us at this moment, we need to save, and we would have at least few months or a few nearly a year of saving cash for operations, because now I'm a COVID. I have slept in my home from last 15 days. If I had if I was in a job, I could have lot of income, enough income to serve my day. But since I am in business, those businesses are going down, so it will create a lot of stress even in family, and even for me, and even for my company. So we need to have some saving even to operate. So that's for me. Thank you.
Thank you, Toastmaster Saurav, for that interesting thought. Yes, the main thing that is coming out from your side is, while saving is very important to take in the current context, but given the fact that the domestic saving is not more than 11% and the consumption is so high, and to beat the inflation that Toastmaster Anil also pointed out, it is apparent that we have to make some investment so that we are protected for the long run also. And we don't know what the situation is going to be. Well, for the third part, may I request Toastmaster Rahul to give your opinion on investment or saving, mostly from a banking perspective, or what you see from an economic perspective. Thank you.
Okay, firstly, to reiterate what my fellow panelists said, saving is the cornerstone of all our living expenses. Like as Toastmaster Anil said, given any function or daily consumption, we do need savings. But as well as what Toastmaster Saurav said, with just a little amount, we may be able to feed ourselves for a day or limited time, but we may not have the ability for it to grow. But what I believe is saving and investment is part of the same coin. You cannot have one without the other. They both have an intricate relationship. In terms of banks, if there is not enough capital saved within it, banks do not have the funds to give it to the investors to invest in the share market or in any other industry. This is the scenario we are facing currently. There has become a trend in investment. People are so excited about investing in some share markets, investing in land, that they have taken out all their money from their savings and put it into various industries. What this has created instead is a very high liquidity crisis in all banks, to the point where I'm sure most of our business members here know that the interest rates keeps getting higher and higher. And as such, the higher investment has caused difficulty in investing in itself. So because investment led to lower savings, investment itself became difficult. And another point that I would like to point out is that saving and investment, as I said, is this part of the same coin, but their purpose is quite different. Saving is for sustainability. It is, we all need it for sustaining ourselves and our daily needs. And in the recent fad of investment, a lot of people I've noticed have forgotten that. And there's this craze about investing in the next big share, investing in next rocket stock. So because of that, I have seen countless people losing money to the point where they had nowhere left to go, and the bank had to foreclose their loan. and sell off their collateral. So investment may be a very crucial part in growing wealth, but we should also not ignore savings, because it is necessary no matter the context. Oh,
Thank you, Toastmaster Rahul. Fellow Toastmasters, may I draw your attention here that we have just heard the importance of saving or investment in the current context, and we have two opinions that I particularly find both compelling. In terms of investment, which we have seen that it has also proven very well for most of the people during the pandemic earlier. But given the fact that the savings is becoming so less, investing for many people because of liquidity crunch has also become a issue. So I just got a message by Toastmaster Kusum, who's also is a banker, and he has mentioned I have to speak. It was not that he wanted to speak. So I think he really is willing to share his experience, and let me take this opportunity to invite him as a guest panelist and share your view, and then we will go to the conclusion of it. Toastmaster Kusum.
Thank you, Toastmaster Sushil. When it comes to money and investing, how can I stay away from that?
Exactly.
So I had to speak. I have to speak. Now, investment and saving, these are 2 points, as Toastmaster Saurav and Toastmaster Anil said. I would say saving is basically a safety bucket, right? And it comes with saving comes with a very less risk. Saving could be in a fixed deposit, saving could be in a saving account, could be a government bonds, treasury bills, which has a very less risk. And investment by nature comes with a high risk. We call it bond, you call it debentures, we call it bonds, you call it shares, you call it land, commodities, etc., etc. Now, investment and saving from purely wealth management perspective, or a personal financial concern, I would say it depends on your risk appetite. Also depends on your age bracket, demography. So if you're in early 20s, you're starting your career, when you don't have a huge responsibility back home, unless there is a certain requirements at home, you can take a risk, which means from moving away from saving, you can go for investments. Because that's a huge, as Toastmaster Saurav says, learning opportunity. It's a quantum leap that gives investment. But as you move along in your career, in your life, in your age, you probably will not have that much of a risk appetite. You probably will need a safety bucket, requirement for various needs. So you probably will want to split your saving or income into investment and saving, depending on your requirement, again, as I said, and depending on your income level. So as you move on, people would not want to take higher risks with their income. So initial stage of a career, you may want to go for 80 to 20% of your income or saving, extra earning into investments. Now, depending on the amount that you have saved or invest in the earlier career, you want to split or lesser that into investment. It all depends on your requirement. And as Toastmaster Saurav and Anil said, what would be your next need? Education, health, parents' requirement, family need, and all this. The formula is you need to have a safety bucket for 12 months of your regular expenses. That should be your minimum saving amount, a liquid asset that you need to have. Liquid asset means either a bank balance or a cash or something that can liquidate easily. That's a general rule of thumb. Over to you, Toastmaster.
Thank you, Toastmaster Kusum. And given the time limit, Toastmaster Anil also has raised his hand. So let me try to come to this conclusion, as while we clearly have heard from all the experts that we cannot get away from savings or investment, taking the current context, savings also seems to be important and investment also seems to be important. Well, it might not have the guarantee of a long-term return back, but saving does have a guarantee of a short-term return back. So would it be prudent to say that, and I would like to get a thumbs up from all the speakers, would it be prudent to say that given the current context, given the fact that what you have or what are the provisions you have, like 12 months, for example, it is important that we take consider both saving and investment parallelly. If you have enough savings, you could try for investment. But if you see that you don't have a threshold of 12 months, I don't know how far that would be taken as a metric, but let's say 6 to 12 months, it is fine to go for saving. If you don't, then you have to go for saving. Is that okay to say that, Toastmaster Anil, Toastmaster Saurav, or Toastmaster Rahul?
Yes. Agreed.
Thank you,
So,
Toastmaster.
Yeah.
Yeah, Toastmaster Saurav?
I think that's a very wonderful timeline. So for Nepal, that's true.
Okay. Toastmaster Rahul, we can see you properly because of your backdrop, but is it okay?
Yeah, it is.
Well, fellow Toastmasters, I think we have kind of reached to a consensus that this could be a way forward for many of us to ponder about. And given the fact that this has been said by the experts, I leave up to you for your final decision. Thank you, and over to you, Toastmaster of the morning.